Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Thursday, June the 24th, 2010. Let's go look at the charts. Okay, this is the Dow Jones Industrial Average chart. Each one of these candlesticks is 1 day, and this is a 10-month chart. I've gone out to 10 months to show you guys something I want to point out today. And I'm going to show you today the number one cause of losses with investors and traders who are either beginners, especially with beginners, and even some intermediate traders. So check this out. We talked to you guys yesterday about the buy opportunity here and how it was supported by the 50-day moving average, the lower Bollinger Band line, and even the 200-day moving average. It was trading above that as well. And you had the oversold condition of the slow stocks. So a person could have bought here and expected a big move higher, and then you got that. The next pullback, you had the exact same thing. Remember, this pullback got all this support by all these items: the hammer candlestick, the 50-day moving average, the lower Bollinger Band line, the oversold condition of the slow stocks, and trading above the 200-day moving average. So that's a lot of stuff there to support the bull trend. And up she goes, back down, does the exact same thing, finds the exact same thing, oversold, 50-day moving average support, as well as the lower Bollinger Band and a hammer signal right there, and still trading above this guy, okay? So back up she goes again. Pulls back down. This time you notice something different. There is the hammer formation, there is the lower Bollinger Band line, there is the oversold condition of the uh, slow stocks, and you've got still this, you're trading above the 200-day moving average, but you're no longer finding support at the 50-day moving average. What does that tell you? The uptrend is starting to decay. There's starting to be weakness develop in this trend. It was really strong back here, and then all of a sudden it wasn't copacetic, and we broke right through that. Does that mean you have to sell everything and run the other way? No, but you need to take note of it. It's now showing signs of weakness, okay? So back up she goes again. Remember, we're oversold here. She's back up, she goes again, pulls right back down. We get oversold here again, and we notice a few new things. No hammer formation. In fact, we have an inverted hammer. We're trading below the 50-day moving average, not finding support there. We're trading below the 200-day moving average, obviously no support there. And the only thing we have behind or supporting is the lower Bollinger Band line, which you can hug the lower Bollinger Band line forever. So it's not a bullish situation. What has just happened is the trend has deteriorated further. Okay, you've seen decay advance from back here. We had some support issues, and now we're losing almost all of them. Anyone telling you to buy this thing is not paying attention to that stuff, okay? And it's something they need to be mindful of. Yes, you got a bounce, that we called it bounce, but we're telling you that this bounce is a short opportunity, not a long opportunity. And in fact, you're now going to find support, if we get rid of those lines, support, or in this case, resistance at the 50-day moving average. Okay, back here you had it for support. Now we're getting it as resistance, okay? This trend has changed. It's no longer an uptrend, it's now a downtrend. And you've got all the support indicators, okay, reversed. You've got this situation here is overbought. You've got resistance at the 50-day moving average. Back here it was support. Now you've got resistance at the upper Bollinger Band line. Back here it was lower Bollinger Band line providing support. You've got the inverted hammer. Back here it was a hammer. The whole thing has just shifted on you. Why does this matter? Because without that knowledge, you can't do jack in the market. All right. You've heard people say, they run hot and cold. They'll make tons of awesome, good trades, and then they'll give it all back. You've heard people say that in an uptrend, anybody can make money. And in a downtrend, only the pros make money. This is why. Because the pros understand when the market shifts, you don't want to be trying to look for long positions, okay? When the market shifts to the downtrend, you don't want to be looking for long positions. You want to be looking for shorts or ETFs that run the inverse of the overall market, okay? And in this case, when you have an uptrend, you don't want to be looking for shorts. You want to be looking for long opportunities. Look at the difference here. Your move here on the downside was that big. Your move to the upside was much larger. Move to the downside was this big. Move to the upside was much larger, okay? Move to the downside was this big. Move to the upside was much larger. Now that's shifted. Big move to the downside, little bounce, okay? You want to work where there's the biggest potential for your success, okay? And obviously now it's a downtrend, all right? Now let me show you what somebody asked us about and why it applies. Let me show you that real quick. We received a very good question yesterday from one of our followers. They wanted to know why we, called it long here. And this is a chart of TZA, and we were it runs the inverse of the overall market. So if you're going long on this chart, you're betting against the overall market. So why did we do this here? Why did it work? And why did we point out the oversold condition of the slow stodge as being a confirmation of our call, when had you used that same strategy back here, it wouldn't have worked because of what I just showed you on the market. Okay, when the market was in a strong uptrend, you don't want to try to play a bear side move. Okay, it will not work. It will break down consistently. Okay, yes, you're going to have a little bounce along here and there, but the real money, the big moves, are going to be in favor of the overall market trend. The overall market trend is bullish, so this bearish trade here wouldn't have worked for you. Now the trend has shifted. We've been saying that for a couple of months now, that in April, May, the game was over, and that has happened, and now you'll see all kinds of activity right here, higher highs. This thing is coming alive because now is the time you can start looking for a bear trade. That works no matter how you look at it. Okay, if you were in an uptrend market, you don't want to go out in the market look for a short opportunity. You want to look for a bullish opportunity. If the market's in an overall downtrend like we're developing now, you want to go look for the shorts or the ETFs that run the opposite of the market. If you get that, you will be beating a lot of traders out there because they don't connect the two. They don't think that one affects the other, when in fact, you cannot ignore those two things. Okay, look at our nightly market analysis video. We get thousands of views every night, but our stock picks get very few. People who know what they're doing pay attention to the market first. Then they go look for their opportunities that they want to trade. Okay, that's paramount to your success. Okay, sorry to harp on that, but it's a really good question. I appreciate that question, and gave us an opportunity to try to resolve this. I know it's a little more convoluted because this is an ETF that runs the inverse of the overall markets and all that stuff, but all in all, this is a good call here because the market is now breaking down and going to a bear trend. That makes a long play in TZA make sense. Okay, that's why it works now and didn't work back then. Okay, awesome. Analysis of the Dow Jones 6-month chart. Each one of these candlesticks is 1 day. Today's activity was down 145 points, very bearish, and the candlestick formation is not a hammer, nothing bullish about this. You've got inverted hammers, like I said. I want to be a bear here 100%. I want to stay that way for quite a while probably. So that's the situation here. She can bounce around for a day or two here. That doesn't bother me at all. Just I want to stay on the short side. That's my call. Okay, and let's see what else we can find. You'll notice here on this chart, we've also got an uptick in sell volume. Hello. This buy volume here, very weak, and the real strength is in favor of bears, as indicated by the volume. Very simple analysis there, or you could do it by, it took them, let's see, 1, 2, 3, 4, 5 days to get above this line, and it took bears 1, 2, 3 days to get below it. There's obviously strength there is in favor of bears as well. Okay, awesome. Here's a Hang Seng index, and you got inverted hammer here and here, overbought condition there. I'd be shorting that. I'll add a short signal to that tonight. And yeah, I'd be shorting that guy. I don't believe they're going to be able to change their direction here. It's an overall downtrend. Here we have the FTSE, also very bearish condition here. Took it 1, 2, 3, 4, 5, 6, 7 days to make that move to the upside and 3 days to erase it. Obviously, strength is in favor of bears. Still overbought condition here. Yeah, I'm just going to stay away from it and short it. That's it. This is a NASDAQ chart. You've got 6 months. Each one of these kind of is a day. Very bearish here. I don't like it at all. But I will note that there are 4 consecutive days to that downside. If you get 5 or 6, you can start expecting a bounce in 1, 2 days, whatever. The overall trend is down, but don't expect that tomorrow the market must go lower. It's not really works. Doesn't work like that. Okay. Awesome. If you've not been to our free website at perfectstockalert.com, we encourage you to do that. It's 100% free. All we ask in return is you refer a friend, and please subscribe to our YouTube channel. That would be much appreciated. Your support helps keep us free, and you definitely want us to be free, or we will charge you $1 bazillion a minute. All right, here's our disclaimer. The disclaimer. You can read. Awesome. I hope you guys enjoyed today's market analysis. Let me know what you think. If you have any questions, I will do my very best to try to help you. All right? God bless. Enjoy the evening. I'll see you all Friday.